Let me speak to you plainly, my friend. In the world of speculation, the only thing that truly pays is capturing the big swing, not the small jiggles, not the everyday noise, but the grand, sweeping moves that carry prices far from where they began. That's where the money lies. That's where fortunes are created. You might scalp a few points here and there. You might feel proud being right 10 times in a row. But it won't mean a thing if you miss the one major move that could have made your entire year. So ask yourself honestly, are you in this game just to stay busy, or are you here to make real money? I have seen more men destroyed by their own impatience than by the market itself. They catch a small turn, take their profit, congratulate themselves, and then stand there watching as the true trend builds strength and leaves them behind. Why does that happen? Because they cannot sit still. Because they mistake activity for profitability. But the truth is this: the market does not reward the restless. It rewards the patient observer, the one who can tell the difference between noise and movement, between a twitch and a tide. Have you ever cut your profit short, only to watch the market move exactly the way you originally believed it would? Of course you have. We all have. And that right there is one of the greatest lessons you will ever learn. The real trick is not merely finding a trend. If you learn to observe properly, the market will reveal trends to you. The true challenge is staying with the trend once you have found it. That is where most people fail. They are too eager, too fearful, too quick to cash out and call it a day. But this game is not about taking profits. It is about taking the right profit. Do you understand the difference? It is the difference between earning a day's wages and building a year's fortune. I learned long ago that the market does not care about me, or you, or anyone else. It moves as it moves, regardless of our hopes, opinions, or fears. The only real question is this: do you move with it, or do you fight it? Most people fight it. They argue with the tape. They insist it cannot go higher or cannot go lower. And yet it does, again and again. The market is always right. Our only job is to be on the right side of it. Tell me, have you ever argued with the market and actually won? You cannot capture a major trend if you are busy trying to predict every minor turn. The man who tries to pick exact tops and bottoms ends up with more scars than profits. That is the gambler's instinct, not the operator's method. I have lost enough money trying to be clever at the wrong time to understand this lesson well. You do not need to buy at the absolute bottom or sell at the absolute top. What you need is the middle, the thick, rich, profitable part of the move. That is where the money is made. So why exhaust yourself trying to be overly smart? Let me paint a picture for you. Imagine a train leaving the station. At first, it moves slowly. It needs time to build momentum. Then it rolls faster and faster until it is racing down the tracks. That is your trend. If you attempt to jump aboard while it is just beginning to move, you risk slipping beneath the wheels. If you wait until the very end, you will find the brakes engaged and no motion left. But if you wait until the direction is clear, the motion steady and undeniable, that is when you climb aboard. Does that not make sense? The problem with most traders is that they crave certainty. They want absolute assurance about what the market will do before they act. But certainty does not exist here. It never has, and it never will. The best you can do is learn to recognize the signals when they appear, and then act decisively. The market offers hints, not guarantees. It whispers if you are willing to listen, but it never shouts. And when you hesitate, when you wait for everything to become crystal clear, half the move is already gone. How many times have you waited for confirmation, only to discover that the profit had already slipped away? Let me tell you something that may surprise you. It is not the act of buying or selling that makes you money. It is the waiting. Many people doubt that statement, but it is true. My greatest profits did not come from the act of trading. They came from sitting still, holding my position while the market did precisely what I believed it would do. It was not brilliance that earned me money. It was patience. Can you sit calmly when you are right? Or do you feel the urge to grab your profit and run? That urge is the dividing line between a wealthy operator and a broke one. Remember this: markets do not move in straight lines. They advance, they pull back, then they advance again. They shake out the timid, frighten the weak, and test the strong. A man who does not understand this will sell at the first reaction, convinced the move is finished when in fact it has barely begun. That is why you must study the character of a trend, not merely its price. You must learn to distinguish between a healthy correction and a genuine reversal. Do you know the difference? Or do you react to every shadow? I have watched operators make a promising start, only to lose their nerve at the first setback. They tell themselves, I will exit now and buy back at a lower price. But 9 times out of 10, the market never gives them that chance. It moves on without them, and they are left standing on the sidelines filled with regret. That is why I say it is not your intellect that earns you money. It is your stomach. Can you endure the pressure? Can you hold steady while the market tests you? If you cannot, you will never capture a major trend, no matter how intelligent you are. Another trap traders fall into is believing they must catch every big move in every stock. The truth is, you do not need many. 1 or 2 well-handled opportunities each year can create your entire fortune. Everything else is noise. That is the beauty of this business. You do not have to participate in every move. You simply have to participate in the right ones. So why stretch yourself thin? Why chase every stock that twitches? Would it not be wiser to wait patiently for the ideal setup, the unmistakable signal, and then press it fully? And do not deceive yourself into thinking you will always be right. You will not. I have been wrong countless times. But I learned to keep my losses small and allow my profits to grow large. That is the entire game. You can be wrong half the time and still build a fortune if your gains are substantial and your losses are limited. Is that not reassuring? You do not need perfection. You need discipline. Human nature, however, works against us. Men become greedy when they should be cautious, and fearful when they should be bold. They sell their winners too quickly and cling to their losers for too long. That is why the market shakes them out repeatedly. But if you can review, that instinct, if you can hold on to your winners and cut your losers, you will already be ahead of 90% of participants. Think about it. When was the last time you held a stock long enough to watch it multiply instead of settling for a quick gain? Never forget that trends arise from conditions, not accidents. Prices do not rise without cause. They rise because underlying forces push them upward. Earnings, demand, money supply, speculation. Whatever the reason, the tape reflects it. The tape is the final authority. Men can debate opinions endlessly, but the tape does not lie. Do you trust what you see, or do you allow yourself to be swayed by chatter? I once spent hours simply watching the ticker, observing without trading. I wanted to understand its language, its rhythm, its temperament. It communicated not through words, but through movement. That is how I learned when a stock was being accumulated, when it was being distributed, when the public was buying, and when informed interests were selling. That is how you detect a trend before the crowd recognizes it. Have you ever remained with the market long enough to truly hear its voice, or do you rush in and out, unable to appreciate its rhythm? When a trend begins, it rarely appears dramatic. Just a few subtle movements, slight strength here, slight weakness there. But if you train your eye, you will recognize it. You will sense that this is not an ordinary fluctuation, but the beginning of something larger. That is when you step in, and you must not hesitate. The man who hesitates loses his opportunity, and once you are in, you must give the move space to unfold. Do not suffocate it. Do not constantly second-guess it. Allow it to develop. Do you possess that level of discipline? Here is where many make their fatal error. They have no plan. They buy on impulse. They sell on impulse. But impulses do not produce profits. Rules do. Methods do. Before entering any trade, you must know how you will respond if it succeeds, and how you will respond if it fails. Without that preparation, you will be tossed about like a cork in the ocean. Do you approach the market with a structured plan, or are you relying on luck? Let me ask you directly. Do you truly want to capture major trends, or are you simply seeking excitement? Because excitement is abundant in daily fluctuations, but if it is money you seek, you must resist that excitement. Train yourself to remain calm when nothing is happening, and patient when something is. Can you do that, or do you crave constant action? I once held a stock that began moving exactly as I anticipated. It advanced steadily with only minor pullbacks, yet I grew impatient. I convinced myself it could not continue indefinitely, so I sold, planning to repurchase later. The result, the stock doubled without me, all because I lacked the patience to sit still. Have you ever made the same mistake? The most difficult part of this business is not analysis. It is waiting. You can study charts, examine data, and construct plans. But once you enter a position, the real test begins. Can you remain steady? Can you ignore rumors, tips, gossip, and fear? Most cannot. They abandon their trades prematurely and miss the very opportunity they sought. Is that not the cruelest irony? Understand this clearly. Sitting does not mean inactivity. It means observing, evaluating, and adjusting your judgment as the trend progresses. It means staying alert. It means knowing when to add to your position and when to step aside. A significant trend provides multiple opportunities if you remain attentive, but you must not suffocate it with interference. Do you allow your trades to breathe, or do you constantly interfere? Another truth, major trends are not captured by following the crowd. The crowd is always late. By the time consensus forms, the most profitable portion of the move has already passed. If you wait for universal agreement, you will never achieve extraordinary results. You must be willing to act when it feels uncomfortable, when others disagree. Are you capable of standing alone in your conviction? Major trends do not appear daily. Sometimes you must wait weeks or mo. HBMH Bennett's during those quiet periods. Many traders lose patience. They take mediocre trades simply to feel active, and they pay the price. The wise operator waits. He trusts that opportunity will return, and when it does, he is prepared. Have you ever allowed boredom to push you into a poor decision? When you finally capture a substantial trend, you must exploit it fully. Do not nibble at small gains when a feast lies before you. Strengthen your position carefully. Add as the trend confirms itself. Allow your profits to compound. That is how fortunes are built, not by constant in and out trading, but by pressing your advantage when you are right. Do you build upon success, or do you exit too early and deny yourself the true reward? The market resembles a vast ocean. Tides rise and fall. You cannot resist them. You can only ride them. A small wave carries you only a short distance. A powerful tide can transport you across great distances. Can you recognize when the tide has turned? And will you ride it until it truly ends? Most people abandon the journey midway, fearing storms that never materialize. Have you done that? Let me state this plainly. Capturing major trends is not about intelligence. It is about discipline. It is about mastering yourself. The market is not your enemy. You are. Your fear, your greed, your impatience, those are the true threats. If you can conquer yourself, the market will reward you. But can you detach from your emotions and act solely on what the tape reveals? There are moments when the market practically invites you to act. The signals are powerful and unmistakable. Yet even then, you must size your position properly, manage it carefully, and sit with discipline. Opportunity is only the beginning. Execution determines the outcome. Do you treat opportunities as rare treasures, or do you waste them as though they are endless? Reflect on your greatest winning trades. Did they not all share one common trait? That quiet, undeniable sense of inevitability. That momentum that feels unstoppable. Now think about your greatest losses. Were they not the trades where you forced the issue? Where you tried to push the market before it was prepared to move? Does that not reveal something essential? Great moves announce themselves. If you understand how to listen, there is no need to guess. There is no need to force. You must observe, wait, and then act when the moment truly arrives. That is the whole principle. It sounds simple, but it is anything but easy. Most men cannot wait. Most men cannot genuinely listen. But if you can, the rewards are beyond imagination. And remember this clearly. Every major trend eventually comes to an end. Nothing continues forever. The same forces that drive prices upward will eventually exhaust themselves. That is why you must study the end of a trend as carefully as you study its beginning. The patience that allows you to hold must also allow you to exit. Too many men ride a trend upward, only to ride it all the way back down. They confuse stubbornness with discipline. Do you know when to step aside, or do you cling for too long? When I look back on my own career, almost all of my profits came from a small number of substantial moves. The rest were minor scratches, small wins, small losses. But those few large swings made everything else worthwhile. That is the true nature of speculation. It is not a steady salary. It is a business built on opportunity. You wait, you watch, you strike, and when you strike correctly, you ride it for all it can give. Is that not the kind of game you want to play? If you truly wish to capture big trends, forget about staying busy. Forget about being right all the time. Focus on being right in a big way when you are right. Learn to wait. Learn to observe. Learn to hold. It is not glamorous. It is not exciting. But it is the only method I know that produces real money in this business. You will be tested at every stage. Your nerves will be tested. Your patience will be tested. Your judgment will be tested. The market will attempt to shake you out at every opportunity. But if you can remain firm, if you can trust your method and endure the storms, you will emerge, wealthier than you ever imagined. And when that day arrives, you will realize something profound. It was not the market that made you wealthy. It was your discipline, your self-control, your ability to capture and ride the big trends. Big money is made in big swings, not in small fluctuations. That is the central truth of speculation. The lesson every serious operator must eventually learn if he intends to survive in this business. It sounds simple, almost too simple, but most men never truly apply it. They spend their lives chasing pennies while dollars pass them by. They are so eager to secure a quick profit that they miss the very move that could have made them wealthy. Have you ever looked back at a stock you sold too soon and said, "If only I had held it, I would be sitting on a fortune"? Of course you have. We all have. That is the lesson. Fortunes are not made in small fluctuations. They are made in big swings. The difficulty is that small fluctuations are seductive. They occur constantly, every day, every hour, and they tempt the restless trader into action. Prices tick higher, prices tick lower. The man watching the tape feels compelled to act. He sees 2 points of profit and wants to capture them before they disappear. 2 points here and 3 points there will not make you wealthy. They will only keep you busy. The trader who tries to scalp every minor move eventually becomes exhausted and poorer for the effort. Commissions alone can drain him, not to mention the mistakes that arise from constant activity. Tell me, have you ever calculated how much you have lost simply by being overly active? The market does not move in a straight line. It swings, it trends, it surges, it retreats. Within that movement are small ripples and large waves. The ripples are daily fluctuations, noisy, unpredictable, mostly insignificant. The waves are the great swings. They begin quietly, build strength, and carry prices far from their starting point. That is where the money is. A man who rides a wave can earn more in a few months than another man earns in 10 years chasing ripples. Which would you rather pursue, ripples or waves? When I was young, watching the ticker, I'm mad. Quick money capturing small moves. I believed myself clever, and for a time I was. But when the market reversed, I lost everything just as quickly. I had not yet discovered the real secret. Small moves are available to everyone, but they do not last and they do not pay well. Only when I learned to wait for the big swing, and to hold once I had it, did I begin making serious money. Do you understand the difference? One approach keeps you occupied. The other makes you wealthy. Consider this example. If a stock rises from 50 to 200, many traders will take profits at 55, others at 60, others at 65. Each feels satisfied with his modest gain, but the trader who holds through the entire move, the one who captures the full swing, walks away with the true fortune. The difference is not intelligence. It is not superior information. It is patience, the ability to sit through noise and wait for the real reward. Do you possess that ability? Or do you possess that ability? Or do you exit at the first sign of profit? Do not misunderstand. There is nothing inherently wrong with taking small profits, if that is your aim. But if you are in this business for significant money, if you seek more than mere survival, you must think bigger. You cannot allow yourself to be distracted by every small movement. The big swing is what matters, and it appears only a few times each year. That is why patience is the most challenging element in speculation. Most men cannot wait. They prefer activity even when that activity produces losses. They would rather act incorrectly than remain inactive. Is that not sometimes true of you? I have said it before and I will say it again. The market is never wrong. Prices tell the story. When a stock begins to trend, when it moves with strength, that is your signal. You do not need to predict the beginning or guess the end. You only need to recognize the movement and enter when it is clear. Then you hold. You do not release your position at every minor reaction. You do not panic at the first dip. You sit because you understand that the big money lies within the big swing. Do you trust the tape enough to sit with it, or are you shaken out by every small tremor? Human nature makes this difficult. We are wired to take profits quickly and fear losses deeply. When we see a small gain, we want to secure it before it disappears. When we face a small loss, we hold on, hoping it will recover. That is precisely the opposite of what must be done. You must hold profits and cut losses. You must allow the big swing to work in your favor. But this runs against most instincts. That is why so few achieve substantial success in speculation. Are you willing to act against your instincts, or will you follow the crowd into mediocrity? Here is another truth about the big swing. You do not need many. 1-0. R2 properly handled each year can secure your entire fortune. The rest of the time, you can afford to wait to remain inactive. To keep your powder dry. That is what separates the operator from the gambler. The gambler craves constant action and excitement. The operator seeks profit, and he knows profit does not appear every day. Have you ever asked yourself whether you are pursuing action or pursuing profit? Capturing a big swing demands more than patience. It demands courage. When your position moves slightly against you, when the market tests you with a reaction, do you have the determination to hold, or do you exit too soon, only to watch it advance without you? The market is built to test conviction. Only strong hands hold through the storm. Only strong hands ride a trend to its natural conclusion. That is why large profits flow to the few who can endure pressure. Think of the operators who built fortunes. They were not scalping for a point or two. They captured major movements, the powerful bull swings, the crushing bear swings, and they held. They ignored the daily noise. They focused on the main opportunity, and when it appeared, they seized it. That is the model to follow. Not the quick and clever trades, but the long and patient ones. Which path will you choose? The gamblers or the operators? Remember, a big swing is not obvious at its beginning. It starts quietly with small movements and subtle signs that something larger is forming. You must observe, study, and learn to identify signs of accumulation, distribution, and steady pressure building beneath the surface. Once you recognize it, once you truly understand it, you act, but action is only the start. Real profit comes afterward, in the holding, in the sitting. Have you trained yourself to see those signs, or are you still reacting to every small movement on the tape? From my own experience, the greatest mistake of my early years was selling too soon. Time and again, I chose the right stock and entered at the right moment, only to take a small profit and exit. And repeatedly, the stock continued to make a substantial move without me. My analysis was correct. My execution was flawed. I was thinking in terms of fluctuations, not swings. That mistake cost me more than all my bad trades combined. Have you ever been right in theory but wrong in practice simply because you lacked patience? The truth is straightforward. You do not need brilliance. You do not need perfect predictions. You only need to recognize when the market is moving, when a swing has begun, and then sit tight. That is the hardest task for any man, yet it is the only one that consistently pays. Big money is made in big swings, not in small fluctuations. That is not an opinion. It is a fact carved into the experience of every operat, or who has survived in this field. The question is this: will you accept it? And more importantly, will you act on it? True profit comes from sitting, not from constant trading. That is the paradox of speculation. It is the very principle that causes most men to fail before they ever truly begin. They believe this business requires constant activity. They believe that if they are not buying or selling daily, they are not working. But the opposite is true. The hardest work in speculation lies not in thinking or trading, but in waiting. The man who can wait, who can sit calmly when he is right, is the man who keeps the profit. The man who cannot sit eventually returns his gains to the market. Have you ever seen a promising position disappear simply because you could not resist interfering? Human nature craves movement. A man holding a position grows restless. If the market moves slightly against him, he feels compelled to act. If it hesitates, he wants to secure what he has before it fades away. But this business does not reward nervousness. It rewards patience. The tape does not move according to your emotions. It follows its own rhythm. The man who understands this behaves like a fisherman waiting for a large catch. He does not jerk his line repeatedly, he remains steady, knowing the reward comes to the patient. Do you manage your trades like a patient fisherman? Or do you consta caliph, inti tug at them? My first substantial profits came not from rapid trading, but from sitting tight. I observed the market break and recognized it would decline further. I went short. The real test was not the short sale. It was the waiting afterward. The tape rallied. It attempted to shake me out. It whispered doubt. But I held. And in time, the market confirmed my judgment. That profit did not come from clever entry. It came from patient holding. Is that not what most traders overlook? That buying or selling is only the beginning, not the end. Most men confuse activity with progress. They assume constant trading means advancement. In reality, they exhaust themselves. Commissions, mistakes, false signals. They eat away the small gains and leave little behind. The frequently trading man may appear busy, but his account reveals the truth. Meanwhile, the man who sits quietly, holding his position as the market unfolds, sees his profit expand without constant effort. Which approach do you believe is more rewarding? Relentless activity or disciplined stillness? It is easy to recommend patience. It is extremely difficult to practice it. Your nerves are tested daily. Newspapers shout headlines. Brokers whisper advice. The crowd hums with excitement. Every fluctuation seems to demand action. You tell yourself, I will take this profit now and re-enter later. Sometimes you succeed. But T of the time you do not. The market continues without you. You are left with a modest gain while the true opportunity slips away. Have you ever exited too soon only to watch the market continue exactly as you expected? The essence of speculation is simple. Profits require time to develop. Grow. A stock never doubles in a single night. A true trend never completes itself in just one day. It unfolds over weeks, over months, sometimes over an even longer stretch of time. If you lack the patience to allow your profits to mature, you will never experience their full reward. You will keep sampling them while they are still green and unripe. The genuine sweetness belongs to the man who knows how to wait. Do you allow your trades to mature fully, or do you snatch them away the instant they begin to show promise? Men often say to me, but Jesse, what if I lose my profit while I'm waiting? My reply never changes. If you are positioned correctly, sitting will reward you far more than grabbing ever will. Minor pullbacks, reactions, and corrections are simply part of the process. They are the market's method of shaking out weak hands. If you allow yourself to be shaken out, you will never witness the true extent of the move. The only safeguard you require is a stop to protect you in case you are wrong from the beginning. Once you are right, your responsibility is to remain seated. Can you trust your judgment long enough to remain still? Or does every small tick frighten you into action? Understand that sitting does not mean doing absolutely nothing. It means performing the most demanding kind of work, the work of self-restraint. It means remaining steady through fear, through doubt, through the market's deceptions and false signals. It means resisting the urge to interfere, to tamper, to settle for crumbs when a feast is on its way. That is not laziness. That is discipline at its highest level. Is it not curious that the hardest work in this game often appears to be idleness to the untrained eye? Consider the distinction between a gambler and an operator. The gambler must constantly be engaged. He cannot remain still. The wheel must spin. The dice must roll, or he feels uneasy. He mistakes action for achievement. The operator, however, understands that wealth does not come from endless motion, but from waiting patiently for the right opportunity, and then holding firmly. That is why the gambler ultimately loses and the operator, if he masters himself, wins. Which one do you resemble when you step into the market, the restless gambler or the disciplined